Hey friends, Lucian here with the Bullish Bears team, making the watch list video for Monday, August 28th. Gonna take a couple minutes here just to share with you a couple things, some tweaks I've been making. Also, too, we've gotten some requests of some people that maybe want us when we're doing the watch list video to maybe point out some patterns and stuff more. Maybe like some areas of entry and exit as well. I'm totally open to doing that for you guys. It'll probably make the watch list videos a little bit longer, but I obviously want to give you guys more content and help you to see things from a better angle when trading. I'll probably mix up the videos and stuff, but this video right here might be a little bit longer because I'm just going to kind of show you some of the things some of the tweaks I've been kind of making, and I'll try and go a little bit slower with showing you some of the things I'm looking at with potential patterns and stuff. So let me do this. Let me go up. Here's the scanner settings, by the way, for anybody that's wondering. Stocks anywhere between 30 cents and $10, minimum 500,000 shares in volume, with a gain on the day of 500,000. Or I'm sorry, of 5%. So you can change this up here if you want to change, go higher price stocks, lower price, change over here if you'd like. I personally don't trade stocks more than $10 usually. So what I'm going to do is I'm going to go over here and show you. There's a tweak, a little bit something that I've been trying. I see that I believe Cameron Foose does this strategy. I'm not sure completely exactly how he does it, but I think he likes to look at the 2-minute chart instead of the 1 minute. So some of the videos I've been watching, he has the 2-minute chart up. So there's a couple things to look at. So usually, the most popular settings, if you go, first of all, when you're doing day trading, I personally like to, number one, have the day chart up so I can map out support and resistance on the daily. Then I like to have, a mid-range time frame within the intraday. Usually I like a 5-minute just to kind of see the patterns and stuff that are forming within the intraday. And then I like the very short-term time period, either the 1 minute or now I'm testing out the 2-minute to basically kind of, get my entry, the shorter time period so I can see the patterns building within the intraday, where there'll be a potential breakout or breakdown on the daily, and then get my entry on the very short time period. Now, just to show you kind of some of the filters that I have on here, the study filters, on my 5-minute, I have the 50 simple moving average. Some people also have the 200. I kind of try to keep my chart pretty clean because I found that the 50 simple moving average, but even more importantly, the 13 exponential moving average is I've noticed to be extremely rock solid. So this shows you really, when the further away price is from the 13 EMA high, above or below, it naturally wants to snap back to the 13 EMA, which is equilibrium. Again, it's not going to always hit it, but that's where it naturally wants to gravitate to when a stock is in extremes. So I really love the 13 EMA as well as VWAP as well. So if the 13 and EMA and VWAP are my two favorites, I have the 50 on here for simple moving average because sometimes price will bounce off of it a lot, but most importantly, I like the 13 EMA and VWAP. So, let me get some water here. I'm thirsty. On the shorter time frame, actually, let me go to the daily as well. The daily, I have the 13 exponential moving average again. This one is it shows like basically, the trend line basically of the stock. Similar with, on the 5-minute chart, that 13 EMA on the daily seems to be a very rock solid indicator to watch. And then I also have the 50 and the 200 simple moving average. So I mark out my areas of support and resistance. I like the 50 and the 200 on the daily because when I mark them out, like if I mark a moving average line you know, like these lines that you see here. I'll show you more once we're doing, when I get into the video. But when I mark out those lines, you know, those are areas of support and resistance. So you really want to watch those moving average lines. And so when I mark them out on the daily, I have it so it goes across my other time frames. So I don't necessarily need some of those moving averages on the other charts because I have it on the daily and I can see the areas of support and resistance on the other charts. So that's my 5 minute in the daily. I have been up until this point really using the 1 minute chart. So I would do the 1 minute and I would have the 9 and the 20 exponential moving average. So that was what I've been using with or doing. But I saw Cameron Fusa's strategy where he has the 2 minute and then he has the 13 exponential moving average on the 2 minute as well. I don't know if he uses VWAP, but I have it on there as well. So I don't know. I kind of like it because I feel like it's an in-between. The 5 minute, again, is going to give you kind of like the pattern to look at. Some people also like the 3 minute as well. So I don't know. I'm trying this strategy out with the 2 minute because it's between the 1 minute and the 3 minute. And I've been noticing it seems like that 13 EMA, even with the 2 minute, is pretty rock solid. Sometimes, you know, it'll go above or below it. It'll be a false breakout or breakdown on the 2 minute, but that's okay because I think it's also a good strategy, I believe, with limiting, you know, giving you some better risk management. So it's something that I am trying out. So on the 2 minute, I'll have the 13 EMA. If I do the 1 minute, it's the 9 and the 20 EMA. So it's all a matter of your preference. But I'm trying this setup right now with the daily, the 5 minute, and the 2 minute and seeing. So basically I'll look at my for my entry on the 2 minute. I'll chart out basically support and resistance on the daily. Then I'll see the pattern forming on the 5 minute, and then I'll choose my entry on where to get in or get out based on the 2 minute. Or if you do the 1 minute, it's again, matter of your preference. This is just something I'm trying. I'm finding to be interesting, so I'll keep you guys updated as I move forward with it. So that being said, let me get into the watch list right now. We're going to start with DMTX. So you'll see here, I have some lines already mapped out here. Now, I believe there was a buyout or something on this one. I don't really pay attention. When I see news, whether I'm really more caring whether it's just positive or negative when news comes out. I don't necessarily delve into the news just in general. So basically, I just look for, you know, whether the news is positive or negative really quickly and just kind of seeing what price action is entailing. So this one right here, again, I think there was a buyout or some type of buyout or merger, but you'll see price right now on the daily is in this gap. Now, eventually, they have the saying that all gaps must be filled. The only issue is you never really know when they're going to get filled. Just because it's in the gap right now doesn't mean it'll fill the gap now. It could take months, weeks, years. Just it all depends. You know, at some point it'll usually fill the gap. But as of right now, you'll see that there is a green candle inside the gap. And now right here, the previous start of the gap, which was resistance, is now support. So if price falls below this, that's a sign that it's bearish. But if it goes up into the gap and it stays in the gap, now you're going to want to see it fill the gap. And once it fills the gap, it's either going to fall back down or it's going to go up and create newer highs. So that's something to keep an eye on. You'll see here, this is not an inverse head and shoulder, but like you can kind of like a lot of the patterns, you can kind of just kind of ad lib to it. So you can kind of, you know, you could kind of almost say here's a shoulder, here's a head, here's a shoulder. And this is the inverse head and shoulder. When it breaks and goes up, is it going to go and is it going to fail or continue going? Sometimes, again, when you look at charts, you can say, you know, either it's a U bottom or inverse head and shoulders, or you could just look at it and just kind of gauge it. So it's not, you know, a perfect inverse head and shoulders. It's not a perfect U bottom, but it's just the idea, again, is looking at the areas of support and resistance and seeing what's going to happen. So this one right here, obviously it's in the gap, it traded sideways. That usually happens with a buyout But I will put DMTX on the watch list just to keep an eye on it because it's going to do something. It's either going to go up and fill the gap or it's going to fail. So we'll put that on the watch list. MSDI. So this one right here finished at 99 cents. Look at that. So you'll see this right at the 200 SMA line. No coincidence. You'll see this is a double bottom basically. So you'll see support here, support here. So now it's going to either go and probably break above that dollar and fly, or it's going to, come back down again. And if it breaks above this area, then the top here would be support, which is, literally right above that dollar marker. So double bottom here. I mean, you got to be careful with these ones, especially these ones that break over $1. There's no telling how they can run. You can see these crazy doji sticks, candlesticks. So again, that's why we day trade and look at basically support and resistance on the daily, then look at it intraday, and you're going after the scalps, and you're watching basically things like level 2, excuse me, and time and sales when they're active, and seeing where the buyer and sellers are coming in. So I will put MSDI on the watch list. The other thing you want to be aware of is float. Shares is another term for float. Anything under 20 million tends to move a little bit quicker. Anything over 20 million might tend to be more of a slower moving stock. Shares with ThinkorSwim, it's not exactly float. It's a little bit usually higher than float, but it kind of gives you a gauge. So if you see anything like around 25 million or so or under, chances are with ThinkorSwim, those are the stocks that kind of move a lot quicker. But then again, they're also a lot riskier because they can go up and down super quickly. And so that's just a matter of what your comfort level is. Some people don't like low floater stocks because they move kind of quickly, and they also have bigger bid-ask spreads. So that's the other thing too. When a stock is really moving and they're low float, you could have a bid-ask spread. Right now, the market's after hours here, but when the market's open, you can see ones that have 7, 8, 10 cent bid-ask spread, and you got to be careful with those because if you time your entry or get it wrong, you could immediately be down quite a bit right off the bat. So that's where you got to be careful with it. That's the risk with trading. Small cap stocks and low floaters, and that's where we highly suggest practicing like crazy with a virtual trading account until you just really become comfortable doing it. So those are some of the things to look for. And I personally like stocks that I feel more comfortable, stocks that have a smaller bid-ask spread, but sometimes you can't get them. I like them ideally under 2 cents, 1 to 2 cents, maybe up to 3. But think about it, the more you go above that, the more that you're down right away on the stock, and the stock has to move up to catch up. That's why timing your entry is super important. So on a low float stock with news that's about to run and go, that's if you time your entry right, then a stock that might have a 7 or 8 cent spread, you might catch that up in 1 to 2 seconds. But if there's a false breakout and it drops, that's when you have to cut your losses and drop it, and you have to take that loss because a lot of times there's false breakouts, and that's the trade-off of the comfort level of if you're comfortable trading these stocks. So it's something to look for when trading these small cap stocks. So NADL would be the next one. Let me see here. Do I like this one? I mean, it's kind of flagging, but didn't really hold its highs. It's got some overhead resistance. I'm not really a huge fan of it. RGSE. Don't like it. ABIL. So this one, again, right at this dollar marker. Let me just erase these here. To 3 green days, went up, came right back down, right at that dollar, pretty much over that dollar marker. Let me see if I like this one. It's just these candlesticks, you got to be careful with them with the long wicks. Again, trading these small cap stocks, that's the trade-off on them, is they go up and they can come down really quickly. But sometimes it's hard to map out support and resistance on a stock like this because of these long wicks that are on these candles. Again, many of these stocks are pretty much garbage companies. So you have to be careful of them. So this one, I mean, I guess you can call this probably almost like a double bottom right here. So you can see a bottom and a bottom right here. So the bottom's basically right there. You want to see it go and you want to see it break out. And ideally you want to see it break out over a whole $0.50 amount too as well. So you can see right in this $1.50 range, there's some resistance on these candlesticks. So ideally, the stock, if it's going to run, needs to break out of this double bottom over here and then go up and then clear these resistance areas and then also clear the 200 SMA as well, where it could get smacked down as well. So there's definitely some areas of resistance in the 150, right down here at the 128, and then the 193. But doesn't mean you can't trade it. You know, you can get 10, 20 cents if it moves. You know, you just got to be careful with it. So I will put a BIL just because it's got some volatility to it. I don't like how it didn't really hold its highs very well, but you know, it's hovering right around that dollar marker, and you know, whole and $0.50 amounts are huge psychological support and resistance areas. So if it breaks $1 again and goes up and clears this, you know, $1.28, it may run. GLOW. Don't like this. This is all real choppy looking. BW. So this one held its highs. Some resistance at that 13 EMA, pretty much right at that 340 area. But you know, if it goes and breaks above, keeps breaking the previous candle, you know, it might be turning around and heading up that way. It did hold its highs, and it did have volume, so we'll put BW on the watch list. RTNB. This one's been very volatile lately. You'll see right here, look at that, it's no coincidence. Right around that $4 marker, you'll see is resistance. You see 1, 2, close to, well, not really a candlestick, that's about 350. But you'll see right there, see how it's kind of basically a U bottom here, it's or a cup. Maybe it's a cup and handle forming. Maybe this is the handle and it's forming down. But bottom line, you want to see the price break above $4. Then it may run a little bit, and then you have some resistance at the 50. But if it breaks $4, then $4 would become the new area of support, and then you want to see how far it goes up from there. So I'll put RTNB on the watch list. Again, it didn't really hold its highs, but it's kind of volatile lately, so it's one to keep an eye on. NCK, nope, I don't even know what that is. It looks terrible. MBII. So not a lot of volume. You'll see some resistance, a lot of it, right about this 126 area, 127. See a candlestick there, getting close to the 120s. You're going to see, I wouldn't even really know what to call this pattern, but you'll see that's really the resistance. These areas of where the candlesticks have gone up before and then they pull back, and you'll see that's an area of resistance right there, 120s. And then you'll see right at the 150 range. No coincidence, whole and $0.50 amounts, that 150, and you'll see right in those areas of you know, previous resistance. So I'm not going to put MBII on the watch list. UMA, OOMA. So again, this one, no coincidence, on the daily, you'll see right there that 200 SMA, that 940 marker. There's a reason why that pulled back. It hit the 200 simple moving average and broke down. You'll see, you know, it's kind of trading sideways here. You could, I'm not, you know, again, sometimes ad lib or look. This is not an inverse head and shoulders, but that's the first thing I think of. If you got rid of these longer green candlesticks here, you could say almost that's a left shoulder, maybe a head or right shoulder, but it's not a head and shoulders or an inverse head and shoulders. Really, it's just kind of just look at the patterns, and you basically want to see, at the top of something like that, you want to see a breakout. So at the base, you'll see right here, it almost wanted to break over here, but then it got hit with the simple moving average. So now, or the 200 simple moving average. So now you want to see price break above that 940. Now, look at this too. There's something also very important to watch here. And this is one I didn't even notice that until I just really looked here. But this is very important to watch on this one. Look at this. So, something very telling. I'm going to actually move that up again. Very telling about this one. Notice where the 200 simple moving average is and where it fell back down. It's right going into this gap up. So they, again, all gaps must be filled. It's just a matter of when. This is a big deal. If price can clear this 941 marker, this 941-ish area would become the new level of support. And if it holds the support, then it's going to want to naturally go up and fill that gap. And that's when price gets crazy, and stocks like that could absolutely fly. So I am going to definitely put this one on the watch list and really watch this one closely to see what happens come Monday, because this could be absolutely crazy. I'm also going to set an alert on it as well. So this will send me a text if price goes back up there. So this is a really big deal if price clears this 940, 40-ish area. So OOMA. Now, it might not do it right away. It could fall down a little bit, then go back up. But this is one to definitely keep on your watch list to eventually go up and fill that gap. It may fall. If it doesn't break that 940 area, then it's going to do what a lot of them do and just kind of come back down here and look what it does. You know, maybe it just tried it sideways. So UMA is definitely one to keep on your watch list, and just even set an alert if it doesn't do something Monday or next week. Set an alert on it when price gets in this area again to keep an eye on it for a breakup, because 941 all the way up to 1144, that's a $2 move. That can happen very quickly when price gets in that gap. SB. So this one right here is at yearly highs. It's got some good volume. So there was a breakout here. So you'll see this is a bull flag, or like a wedge, flag. And it formed this wedge right here. And then price went and then boom, broke out. And again, no coincidence, right at a psychological resistance point of $3. So you'll see it broke out of that $3, and then it went up to $3.34. So now $3 is the new level of support. So you want to see if price is going to go up and break the $3.34 to continue running, or if it's going to come back down to that $3 area. Now, it may come down to $3.10, $3.20, but that's, again, the level of support that you want to watch is at $3. It's a huge psychological support. It's a huge support area now. But that's a wedge here. You see, like, it's kind of like a flat top breakout. So you'll see price hit here a few times, and then it kind of came right down to the 13 EMA, kind of went and built the momentum, and then boom, volume came in, broke it. And you'll see right here on the 2-minute, you'll see this. This is on Friday. Little bits of consolidation, nothing really going on, and then look right here, that big green volume candle broke, and then you can see price kind of just ran this 13 EMA. That's why I like this 2-minute, the 13 EMA on the 2-minute. It looks a little bit different than it would be on the 1-minute, but you can see here price kind of hovers along that 13 EMA. Now sometimes price will fall below it, which is okay, but if you have it on the, you'll see right here, let's see where it fell, right at 1052 on the 2-minute. Well, if I have the 1052, you'll see right here on the 5-minute, 1050 right here, it was still technically above the 13 EMA on the 5-minute. So if you have the 5-minute up as well as the 2-minute, when price falls below that 13 EMA, look right here on the 13-minute on the 5-minute and see what's happening. If it's still above it, then you could be okay. And you can see right here, this SB really rode the 13 EMA all day until this doji candled, and then it broke right down here. So if you got the breakout right here at $3 and you waited just to sell later until it broke below the 13 EMA in the 5-minute, that's 20, you know, $3 to 326. That's a 26-cent move, just riding that 13 EMA. That's why I like the 13 EMA a lot, is that it's very easily able to ride it. And you can see the further away price gets from it, it wants to move back. Further away it gets from it, it wants to move back. So that's why I really like that 13 exponential moving average. So SB, definitely put that on the watch list. FLWS. I mean, it's got some overhead resistance here. The moving average lines. Not saying it can't move, but I don't like the setup. RWLK. Let's see here. So you can here's a pattern to show you. Basically, you can call this almost an FU pattern or a head and shoulders. You can call this area. It's not like, you know, they call this an FU pattern because it's almost like a middle finger right here, middle finger, and then your knuckles over here. So you basically can call this like the head area, and then these things fall right down and they just crash. And when, you know, you can see if it breaks down right here, which is kind of like that neckline, it just kind of fades down. Now, you could call this right here being formed either an inverse head and shoulders, like this could be a left shoulder, this could be like a head, this could be a right shoulder, or a U bottom. But even so, you want to see right here, there's a resistance. And look, or you can even call it almost somewhat a double breakdown, just kind of, or a double bottom. You can call this a double bottom as well. Again, it doesn't have to be a perfect pattern, but you can see price, you know, it needs to break this area, but then look what you have right after that. You have that 200 simple moving average that it's got to break. So that's definitely something to watch. If this thing breaks this $2 marker, this thing could fly. So it's, you know, that's what you want to keep an eye on, is that 197 area. Is it going to go and break, or is it going to fade? I'm going to just set an alert for this. I don't think I'm going to put it on my watch list. Pull it when it's up in this 195 range. So yeah, I'm not going to put that on the watch list. CATB, another one now. There's, look at it, you know, this gap up here, lots of overhead resistance. This trading kind of sideways, not doing much of anything. It's got to break these areas of resistance. But look, you know, there's so much just crazy choppiness. But all it takes is one day to go and break this. So you want to see if price is going to eventually get up to this level here. It's got to break this 200 simple moving average. Then it's got to get up to this area here, this 277, to then go up and fill the gap. So I'm going to set an alert for here. Again, it's always really good to create alerts so you can see when price starts to go in these areas. You know, it's something to definitely watch, because once they go up in the gap, they get crazy, and a lot of times they fill the gap. So CATB, not going to put it on. GOGL. So this is a U bottom. This is a big U bottom. You can see this U going, and look, no coincidence, right at $9. And look at that. Totally missed this one. $9. It had a dollar move on Friday when it had that break. And as you can see, this thing just rode the 13 EMA. Look at this. Perfect example. Rode the 13 EMA. What did it do? When it got further away from the 13, came right back to the 13, smacked off of it, went back up, and then boom, and it starts to fade over here. So if you got the right entry back over here, you could have just rode this thing all the way up until it just broke the 13 EMA if you wanted. Now, you probably would have been smarter to probably sell right around $10, that whole dollar amount, when you saw that doji candle forming, but that was definitely a nice one to watch. So now $9 is a huge support level now, and then $9.95 would be the new area of, you know, to break. So this is definitely a nice one to watch. Chances are, if this one does break down again, $9 is a new support level. You know, I'd watch out for $9.50 as well, because it's a $0.50 amount. But this is a huge you know, base forming, boom, broke out, gapped up. Now I'm definitely going to put GOGL on the watch list. NXTD. Wait, did I see this one before? No. Excuse me. So price now has to go up, and really there's lots of choppiness here. Again, you want to go back, no coincidence. You can see when you zoom out, resistance in this area here. Got to break that 200 SMA and then go up from there. I don't like it, not enough volume. DSX, let's see here. You can see here, another one, just go all the way back. You can see, I don't know what pattern you want to call this, but if price can break that 440 marker, again, right around a $0.50 amount, that thing could potentially fly. Then you can see there's kind of a gap up to potentially fill as well, this gap right here. So if this thing can break that 440s, then this will become the new area of support, and then watch and see if it breaks 450s, the $0.50 amount, to go up to fill that gap. This one could potentially fly if it goes up into that area. So we're going to keep an eye on that one as well. DSX. FRTA. So this one could be almost building us almost like a symmetrical triangle. If you look right here, let's see here, right there, and then let's see this one here. So with this one, you want to see it's kind of basically a triangle formation. You want to see it break here and then come across a 620 and then see if it's going to go and fill the gap. So that's what you want to watch and see if it breaks and then breaks above here. If it breaks this 511 marker, it might go up and then form a double top, and then it's either going to fail or go up and fill that gap. But that's one to potentially watch. See if it breaks really this 511 marker, that 507 marker. You know, it has some room to run before it gets there, but that just takes one candlestick to go and break that, and then watch those areas. So I'll set an alert right there. So we can put FRTA, not a ton of volume, but you know, just keep a look at these patterns. Some of them won't have the much volume, and then it just takes one break and then the thing will fly. So this one broke out of this area here, then it went up, flagged, came right back down. See this? Perfect example. Once it broke out of this major pattern, what did price do? Went up, smacked right back down, touched support, and then what did it do? It went and it broke. So now I want to see if price will go up from there. It's 163. This one, you know, now 153 would be, 150s would be like the new level of support. So it's either going to come back down before going up, or it may just continue going up. You'll see right there, $2 has lots of resistance up in those areas. So we could put NM on the watch list. Oops. NLST. Not a fan, but keep an eye on it. Could go up to fill that gap. It's not really high up. I mean, it's got a little bit of a move, but, you know, 70 cents up to that $84 maybe to fill the gap. Don't like it. HMNY. So this one right here can see this is kind of a almost like a wedge or a triangle being formed here. So you can kind of see right here. And then, so you can kind of see the higher highs right here, or higher lows. The top right here, you want to see it break that 384. If it could break 384, that they could fly up. So it didn't really hold its highs, but it's got a pattern forming to keep an eye on. So I'm going to put an alert there as well. So you want to see if price will break that. If it breaks and it breaks that 385 marker, it could potentially fly. But as again, you can see this thing has a history of pumping and dumping, but it's still falling down. But as you can see too, you know, if it could break this $5 marker right there, who the heck knows? Let me see. Who the heck knows how high this thing can fly right above that area there? So you can see that would be, you know, a decent breakout. So I will put HMNY on the watch list just because of the pattern that's forming. There we go. SHIP. All right. So this one, another one, you want to see it clear this 125 marker. It's creeping. Price is creeping up there. And if you can see, that's a double bottom, big double bottom. And that's a huge area of resistance. And you can see the start of the gap right there, going up to fill the gap right, let's see here. Marking that in red, that if it can break 150, then it's probably going to go up and fill that gap up in the twos. This is one to watch, a huge potential breakout if this thing goes. And number one, breaks that 125, but then also can break the start of that gap at 155. I'm going to put an alert as well on that one. So SHIP we could put on there. Doesn't mean it's going to happen Monday or Tuesday or next week, but keep these on the watch list and see and create alerts when they happen. Because when they go and they break certain levels, that thing breaks $150. That thing's going to fly up and probably filling that gap. AVEO, this thing flew. Let me default or click that. This one had a U bottom breakout or U cup and handle right here. Cup with the handle. Broke above here, one up to $4. Now you can see this, I guess you'd call this, you know, resistance right up in this area here. So again, that one went up and flew. So now you want to see, will price break $4? Huge psychological resistance point. It's at its yearly high. So again, if it goes and breaks $4, then $4 will be the new level of support. As of right now, I'd probably look right around this 350s marker as an area of support down here as well, right at that 13 EMA. So, you know, look for the $half amounts on the way up and down. So AVEO, that will go on the watch list. CYTX. Don't love it. SALT. It's been moving up. You can see. Want to see it break that 842 marker. Could run if it goes and breaks above. I mean, it's one to keep an eye on. It definitely has some volume, so we'll put SALT on the watch list. CRR. Don't like it. Let me see how close we are. This watch list is getting a little bit long. So I'm, again, just trying to show you guys a bunch of stuff, but let me kind of try to move it up a little bit quicker. I apologize for it being too long. Don't think I love that one. STNG. Let's see here. we can basically right above that $4 marker, then 420. You want to see it break those areas. But, you know, it's got some overhead resistance. It may fall. It does have some volume, so we could put STNG on the watch list, but it's got to break those areas for it to really go. AEZS. Don't like it. OBE. It's got some overhead resistance. RVP. Don't love it. ARTH. Yeah, I saw this one right here. This is a big, this could be a left shoulder, head, right shoulder, or you can call it big U-bottom. I like it inverse head and shoulders. And now it did break here, so now this 80 cents is support, 86 resistance. If this thing breaks $1, this thing could fly. But it's been running, so this is one to definitely keep an eye on. EGLE. It's got a break 483. Don't like it. CLD. No. FRAN. No. BETR. No. MGTI. There was lots of potential plays here. So that's also why this watch list is a little bit longer as all these ones that are on the watch list. Look at this huge U-bottom here. If this thing can break $3, it may run. But you can see there's a gap right there, 309 to 322 range. If this thing can break 292, this thing could run and go up into that gap. I like it. And you can see it's just been bull flagging on the way up. So you can see it's got to break that $3, go in there. It'll probably fill the gap at some point. So MGTI, definitely one to keep an eye on. It's a huge pattern forming right here. Look at that, huge U bottom. And then see, now it could turn into a cup and handle. It can kind of trade sideways for a while until eventually goes up. But it's one to keep an eye on. CHS, no. NMM, it's got to break that 211 area, then go up. It's lots overhead resistance, don't like it. GV, no. KMDA, no. HLX, let's see here. You want to see it break this 669 area. And I don't like it. CRMD wants to go those areas. That's the gap. So you want to see it break that 68 and then go up literally right to that $1 to fill the gap at some point, whenever that will be. MNKD, or Mankind, MNKD. Clear the drawings. It's got to break that 190. You could even say that 203 area. It's got to break $2 for it to really go up. BRS, I mean, it could, you know, look at the gap up. It's got a ways to go. But if it breaks this 870 marker, this thing could go up. So that's one to definitely watch. Let me just do this. This thing could really be kind of crazy if it breaks this area, this 870 marker. So we'll put that on the watch list. BRS, PDLI. Oh, okay, that one went right up and filled the gap. So as you can see, this was bull flag, and look at that, it formed this wedge, this ascending triangle wedge, and it went and broke out and went and filled the gap. Now it's got to stay right at that $3 area. Is the now it's got to come down. Now these areas right here are going to be support, so it's got to either break above or it's going to fall back down. But it filled the gap. FOSL, no. CRC, no. JBSAY, maybe potentially going up and filling this gap. There's a couple gaps, few gaps here. You look at this one here. This could be a triangle formation forming here to go up and fill that area. This one might be a nice one to watch. So this is one to basically, if you want to see a decent pattern, let me just do this. You can kind of, let's see here. It's creating the higher lows, as you can see there. And you can kind of, if you want to do this, see that kind of like a triangle formation here, kind of coming down over to here. So this could be an ascending triangle to then go and fill these gaps. And if it fills, I mean, there's several gaps here, right up. See that? This is definitely an interesting one to watch. So lots of areas to potentially go up and fill. Who knows if it'll go up to the $6 marker and just completely fall, or if it's just going to continue to go up. But it might be a nice one, you know, as a swing trade potentially, but I don't know much about the company. I just do mostly day trading. So that's a watch list. Sorry it took so long, guys. Again, I'm trying to give you more to look at on these stocks, just to kind of you know, help you with more entries and exits and patterns and really what to look for. And we just highly suggest practicing just nonstop, you know, when day trading. That's why we really like ThinkorSwim's platform. So again, if you haven't done it already, make sure you like and follow our fan page here. We're growing like crazy. We post our updates over here, but we also put in our trade ideas watch list, our pre-market watch list every morning. So we take this watch list and we make, you know, videos, as many as we can, like I'm doing here, but we also send it out by email as well. But we also post our watch list in the morning with trade ideas, which is our scanner of choice that we put down here. So that's why you want to make sure we post it by 9 a.m. every morning. So that's why you want to like and follow our fan page so you get the notifications. And as you can see, right here, we post the watch list right here before 9 a.m. So Trade Ideas is our scanner of choice. It's the one we recommend. If you want, we do offer a community discount of 15%. Our affiliate link is below in this video with the promo code BullishBears15 in all capital letters to get a 15% discount. If you can't afford Trade Ideas right now, then use a free scanner, use our watch list. But when you can't afford it, we highly recommend getting Trade Ideas. It's definitely the best scanner. We also offer a discount on Benzinga, which is live news. Basically news in the morning. You can see here, here's an example of Benzinga, and you can see it's just streaming news right here, as well as they have a thing called Squawk, and Squawk is an audio feature that reads off the news too as well. So Benzinga is a great tool, one that we really love. It's just awesome for news and staying updated. If you can afford that, we highly recommend it. We have a promo of a partnership with them for 25% off. It's Bullish Bears 25 in lowercase letters, and the link is below to both of them. We try to partner with only just very reputable companies, and Trade Ideas and Benzinga are just really awesome companies that we recommend. If you haven't been over to our website yet, go over to bullishbears.com and make sure that you subscribe to our watch list. We send them out by email. So this video right here, we send it out, the watch list by email. So make sure you click here to subscribe. We do have a great trade room. If you haven't joined us yet, we're broaching 500 members in our trade room. We're currently offering our trade room for free right now. So if you want to come and shadow other traders from around the world and really learn, we highly suggest that you come and do that. Come join the trade room right there. We have some courses over here. We have a couple $1,000 worth of free trading courses. We highly suggest taking them if you want to learn more about stocks, options, day trading. You know, take their courses here. And we are a contribution-based community currently. Right now, we do not charge our members for, you know, any courses that we offer. We don't charge for our trade room. Trade rooms, are $100 on up. Elsewhere with other membership companies, our courses, nobody just gives away a couple $1,000s worth of free courses and $100 minimum a month trade room for free. But that's what we're doing because Tim, Dan, and I, we ideally want to be unique. We want to try something different and basically offer everything for free. And in return, we rely on the contributions of our community members. And every little contribution counts and helps out. So ideally, Tim, Dan, and myself would love to do this full time and never have to charge membership fees. But in order for us to be able to do that, we need everyone to just at least contribute a little bit to help us grow, because Tim, Dan, and myself, when you split the money 3 ways, it's not a lot of money, and it takes a ton of donations coming in for us to be able to do this full time. And if we can do it full time and stay contribution based, then we can really offer something great for you guys and not have to charge $150 a month like everybody else does in the industry. So if you'd like to contribute to us, we have contributions monthly for as low as $10, $25 a month, really to make it affordable for everybody. And if you don't want to do monthly, we do have single payment donations as well. And last but not least, make sure you subscribe to our YouTube. Our YouTube channel is growing by over 1,000 YouTube subscribers a month right now. It's absolutely insane. So make sure you subscribe to our channel, like our videos, share them, and feel free to comment with any questions that you have. So hopefully this video helped you. I try to make it a little bit more in depth for you. And again, happy trading on Monday. Enjoy.